Let's look at the holiday business. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We can find the holiday industry in the economic signals. So the theme is here. The performance, it is, significantly outperforming here the S&P 500 from the lows. We have seen a little bit of a pullback. So if we go here and you can see, the companies. So we have, the cruise lines, we have some airlines, we have some travel planning. So a bunch of, holiday related stocks. We will look at TripAdvisor now. Pretty good move here from the lows, higher than the average. But we've seen a bit of a haircut. So first, here is the company's website. They have this site where you can just very easily plan your travels. So definitely, it's an interesting business, but it's certainly been hit, by this whole situation with the spread. If we look here at the seasonality of the stock, we can see that the current month, March, is the strongest. However, the coming months, April, May, June, are, more or less 50-50. There usually is some gain. But you can see here that, March, as far as the percentage of months in which it closes higher than it opened, then certainly March is the strongest month. If we go here to the charts, so this is the big picture. Weekly data points, literally all the data we have here for TripAdvisor. Quite clearly, there's been a very impressive move here from the lows. That is, of course, clearly bullish. But something that is a bit wonky. You can see here that, between 2014 and 2017, TripAdvisor was in a very major decline. I mean, this pullback here was minus 73%. And this wasn't, it wasn't like a situation we have had now, but nonetheless, TripAdvisor was in a huge downtrend. Then a big rally, but you can see here that TripAdvisor, it reached a high here, and, this was, in late 2018, then it reached a low here, minus 78% plunge. So quite clearly, TripAdvisor is a fantastic stock to trade. Huge rallies to the upside, but fantastic shorting opportunity for the bears when it turns bearish. Huge. And it is very interesting that this happened way before the situation with the mask. Okay, the mask situation was not big, but nonetheless, it was in a downtrend. That is very interesting. That puts this rally in a different kind of a light. Because how come we are this bullish now? And we have broken out above the highs here of 2019. We are challenging here the early 2019 highs. Thus, does that make sense? Looking at RSI, we have really never been this overbought before. So the RSI, weekly RSI, is in extreme risk territory. The previous time we had a very big downtrend. We are seeing an exhaustion candlestick so far this week. The previous time we had this major exhaustion candlestick here, a major downtrend. Here, a bit of an exhaustion candlestick and a pullback. Hence, this current week is very risky. It's very dire here for the bulls. Looking at the correlations, there's minus 39% negative correlation with the S&P 500. When we look here at accumulation distribution, so even though we are challenging these highs, we can see that accumulation distribution was significantly higher back here than here. So this attempted breakout has been on less buying volume. So that is a bearish divergence. When we zoom way back here and we look at the distance between the price and the red 200-day moving average, we have never been this far away. RSI also, in the upper region, and you can see that historically, throughout the entire history of this stock, it likes to use the entire range. We go up and we go down, up and down, and because we do that, I mean, you can, obviously from the top here to the low and the top here to this low, that was a major pullback, but it has big pullbacks every now and then, like here as an example. This is minus 30%. So this is definitively a very volatile stock. I would categorize from a charting perspective, currently looking at the coming weeks and months, this is a very high risk situation for the bulls, based on the historical chart data. And there's a 85% positive correlation here on the daily data points with the S&P 500. But let's continue. We cannot draw a conclusion until we have all the data. Now we're going to go to Finviz, and you can see that we have broken out above all the trend lines. This is where we did have that reversal pattern as well. Huge moves. That happens, of course, when you have big rallies. Options are available. That is very interesting as far as different strategies goes. But of course, I am here to look at the analyst price target. Many companies are covering this stock, big analyst firms like Citigroup, Barclays. Based on the current price and the analyst price target, they suggest a minus 36% downside. That is rather substantial. When we go to Saks.com, they have a number 3 hold, F value score, degrowth, and so the combination of a poor value score and the poor growth score, that is, problematic. And also F momentum. The industry rank is in the bottom 9%. They categorize it as internet commerce. I guess I would say that this is more specifically holiday related. It is more recreational. There is no dividend, hence there's no incentive to hold on to the stock. A big company, 8.2 billion market cap. Yeah. Okay, so to sum up my take here on TripAdvisor. So looking at the theme, holiday, there's a saying in investing that is very true because we see the pattern repeat, and it's buy the rumor, sell the news. And there certainly has been a lot of people who bought the low here in many of these holiday stocks. They have seen huge surges. Many of them are challenging, or are even above the highs before the major lockdown and all of the issues that are related to that. Hence, there's been excess to the upside. And definitively, when we look at the chart here for TripAdvisor, this is a very high-risk situation for bulls. The seasonality is a bit, this is a strong month. But the coming months are, more mediocre. Looking at the fundamentals, they were clearly bearish. Hence, when we take it all together, looking at, the coming years, for TripAdvisor, I think there's reason to be cautious. We have seen that when it does have these pullbacks, and it has had major declines, as we saw in the chart way before we had the current situation. So this idea that that there's this massive pent-up demand for people to travel all over the place, I think there's reason to be a bit skeptical, especially the extent to which TripAdvisor will benefit from any of that, given the history of the security. Looking at the coming months and weeks, I do think that this is a very high-risk situation for the bulls. It's all about buying low and selling high. So yeah, that is my take. As far as the general market goes, I do think that there's very good reason to have a market-neutral portfolio, because there's a lot of risk factors out there.